Hello and welcome. You're watching Last Take. I'm Shweta Kothari. With me is my colleague Krishna Kumar here in the News9 studio. We're bringing you all the markets update. Krishna, markets ending on a flattish green note. Some green shoots were observed towards the end of the day. A very, very volatile session on the back of what is expected to be a big announcement, the last possible announcement from the US Fed, by the way, of whether it's going to be a pause is what is expected, whether it's going to be a hike in interest rates, that is unlikely, but markets jittery on the back of that news.
Right. In fact, it opened in the flat to negative territory, Shweta, in the morning. It was down about 0.1, 0.2% on the sensex and the Nifty. So in a sense, it's a bit of a trend reversal that it's flat to positive by the time it hit close. But you're absolutely right. The biggest cue available after the end of the state elections, which those cues have been taken and digested very well by the Indian stock markets. The only other cue before we wrap up the year is, as you're rightly pointing out, is the US Fed, and waiting for cues. Not also, you got to take in, factor in some profit booking after the kind of run-up we witnessed over there. We saw some profit booking yesterday as well. I'm guessing there was some profit booking in some of the stocks today as well. So, of course, now the big trigger is the moment that announcement comes, how will Indian markets react?
All right, and the announcement is expected tomorrow. Nifty up about 0.10%, Sensex 0.05%, mid-cap 0.88%, small-cap 0.87%. India VIX down by 5.09%. So volatility index down to almost the 12 mark there. I'm told Amrish Baliga, a markets expert, joining us on the show. Amrish, good afternoon. Thank you very much for taking time out. What are you making of the volatility in the markets today?
I would look at it from a slightly positive angle because we saw the markets volatile and correcting during the day. But then in the second half, we saw that the markets have bounced back decently well, especially towards the end. So I think, that's a positive sign. And in case we see a pause as far as the Fed is concerned, because that's the expectation. So if that happens, maybe we could see the markets opening better tomorrow.
Mm-hmm.
So are you saying that, like, so far the markets are already factoring in the fact that it is going to be a pause from the US
Absolutely.
Fed? And also, are you also witnessing some, would you say that the kind of sessions that have been today and yesterday, that there is clearly signs of profit booking after the mega run-up since the beginning of this month?
See, what's happening is a profit booking is quite normal after the sort of a run which we have seen. But then the best part is, despite the profit booking, that the markets are holding up, which means that there are new investors who are coming in and buying whatever is being sold. So, as of now, I don't see a huge downside as such, because if you look at, whatever information or news is coming, everything seems to be positive. The macro data seems to be positive. I think the last thing is to see whether there's a pause as far as the rates are concerned. And if that happens, I don't think there is any other negative news which can come, at least till the year end or the early next year. So I think the road ahead would be decently clear, except for the fact that FIs would be going on a vacation. But in our markets, we've seen that in the last 1.5, 2 years, that the FIs really don't matter too much. If they're selling, it's getting absorbed. If they're buying, that's a catalyst for the market.
Mm-hmm. All right, and FIs are going to go into a pause, a holiday for that matter. But we also know that this is going to be the last US Fed FOMC meeting before the year ends. I think what markets will also closely eye would be the commentary with respect to what's to come. Inflation more or less still remains sticky. Are you of the view that perhaps US Feds could cut interest rates in the first half or in the first few months of the next financial year?
I think, that's the cue which people are looking for from the commentary. But my understanding and my feel is that possibly this can happen in the second quarter of the next calendar year. So could be sometime from April to June, we could see a cut. I don't think we can see a cut as early as the first quarter.
Okay, not happening in the first quarter. That is what, in fact, at least 2 to 3 experts have told us so far. So, would not be prudent to expect an interest rate cut anytime soon.
It's good that you hear it from Mr. Baliga so that we can temper our expectations at least as to what the US Fed is going to do come next year. Mr. Baliga, before we go any further, I do want to discuss, IPOs, 7 IPOs hitting the street this week, two listings as well. But before we get to that, the quick question is that, as we wrap up the year, are you looking at any particular sectors that you should be focusing on, if that's what the broader commentary is going to be? Any particular avenues for value buying, even in these markets?
I've been talking about one sector for quite a while. I think the last couple of sessions also we have discussed the same sector. Specialty chemicals is what I'm looking at should really perform in 2024, because in the last 2 quarters we have seen that the margins have bottomed out and they started improving slowly because the input costs have come down for them. Now going ahead, we should see that the top line also starts moving up quite sharply, because in 2024 I see China plus one actually playing out very well for the specialty chemical companies. So I think even now, most of them we are seeing that they are still decently close to their lows. They have bounced back about 10-15%, but that's nothing much. So I think it's still time to buy into the specialty chemical companies.
Okay. And domestically, come to think of it, the macroeconomic data that is emerging is very mixed. Inflation figures for the month of November have gone up at 5.55% as opposed to October, but industrial production is at a 16-month high. In this case scenario, what is your medium to long outlook on which sectors are going to perform or overperform perhaps the markets?
I think the sectors which will continue performing is going to be infrastructure, automobiles, cement. I think these are the sectors which will continue to outperform. In addition, we'll see FMCG and white goods also performing at least over the next 2 to 3 quarters.
Okay, and I'm looking at some of the top gainers and losers as far as today's session is concerned. Now, IT seem to have lost some momentum there. In fact, 2 of the IT stocks among the top 5 gainers and losers. IT pack overall down by about 1.28%. What are you making of what's happening in the IT space?
See, in the IT space, we had seen a decent sort of up move a couple of days back. And even at that point of time, I think last week itself, I said on your channel that possibly one should wait for the first quarter of 2024 to start buying into IT, because this rally which we are seeing right now may not really last too much. And I think one of the major losers today was TCS. Again, because people have got back the remaining shares after the buyback. So those who had bought only from a buyback perspective are actually selling out the remaining stocks in the market.
Mm-hmm. But, what's your long-term outlook of IT? Because with what the commentary that's been coming in so far, it was expected that perhaps the higher for longer narrative may not be sustainable towards the second half of the next financial year. Now, the data that is coming in, as I said, is very mixed right now, both from the US and from India. Do you think the discretionary spending will pick up in the US in times to come, perhaps reverse the fortune of some of these IT companies?
And also, would you also agree, concur with that entire washout year commentary on Indian IT?
No, if you see, 2023 was more or less a washout, but then 2024, what I expect is that from the second half of 2024 calendar year, we should really see the discretionary spend increasing, and we should see more sort of orders flowing into the IT companies. And if I'm expecting that to happen in the second half, I think it would be a great time to buy into IT in the first or possibly the second quarter of the next calendar year. I would possibly look at buying from, say, sometime around March, April, once the earnings season is over. I think that's the time to start buying into the IT stocks, because you really can't go wrong if you're talking of a slightly longer term. If you're talking of the next 4-5 years, you really can't go wrong with the Indian IT space.
Right.
What we have seen in the last 1.5 years is, order flows that slowed down, and at the same time, we have seen the costs going up. I think both these things came together, and that's what hit them. But I think things should normalize going ahead, because clearly you'll have the margins again stabilizing over the next year and a half. So I think it's a great time, but not right now. I would say wait for a quarter or two.
All right, and while we're at it, let's also take a look at other gainers and losers. The pack overall, let's bring the chart back up. We're looking at, the top gainers and losers as far as sectoral performance is concerned. I'll request my team to bring that chart back up on screen. Okay, so banking sector marginally down by 0.01%, auto up by 1%, FMCG 0.7%. Pharma up by 1.12%, metal by 0.88%, PSU banks by 0.7%, realty 1.61%, media 0.4%, private bank down by 0.7%. Overall, more greens than reds that we're looking at on our screens. But before we move forward to the IPOs that Krishna is very excited about, I also want to pick your brains on the Nifty Realty. Now, Realty continues to be an outperformer. Amrish, what are you making of the momentum? Barring yesterday when we saw Realty snapping some of its, winning momentum, Nifty Realty is back up 1.61% today. What are you making of what's happening in the Realty pack?
See, one thing is in the last possibly 3 to 4 years, real estate stocks were the ignored ones. But then if you see, the way the number of units were sold, in the sense the flats and office spaces which were sold in the last close to 12 to 15 months, I think that's a record. Most of the companies have shown nearly 2x sales happening, and that is continuing. That is not really a short-term thing. That's even continuing as of now, and it is across affordable as well as luxury. Luxury is actually getting lapped up, what we've not seen in the last 10 years. So if you are looking at the visibility, I think the visibility is there at least for the next 2 to 3 years, if not more. And most of the inventory is getting taken up. So I don't really see anything going wrong with the reality space. And I think the other thing which normally people look at when you look at real estate is the political stability. I think even that roadmap is decently clear. So I don't see anything really going wrong with the real estate space.
Okay.
And even at these levels, I don't think they are too expensive. There's still a decent upside left. So, if you're looking at stocks like Godrej Properties, Shobha, I think these are the stocks to be looked at.
All right. And let's then finally move to the IPOs,
Right.
Krishna.
It's been buzzing the primary market. Mr. Baliga, the question here is that, this week alone, you're looking at 7 IPOs opening, 2 listings happening. There's Muthoot FinCorp, there's DOMS IPO day 1 that's happening today as we speak. I want your thoughts on how to go about seeing this flush of IPOs and how to go about investing in them.
No, see, what we have seen in the recent past is most of the IPOs which have come have given extremely good returns to the investors. And as long as the valuations are decent, I think one should be applying for the IPOs. For example, if you're talking of DOMS, I think one can actually apply for it from a listing gains perspective. Clearly, I think people are expecting it to open at least at about 50-60% higher. Whereas, we have seen stocks like Fed Financial, which was, I think, slightly steeply priced. So clearly, when it got listed, we didn't see any gains. In fact, people have lost 2 to 3%. So from that point of view, I would say just look at the valuations, but the valuations are decent. Just apply for the IPO.
All right. Also, the thing is that you have a couple of other stocks. You have IREDA up over 10%, giving great returns as well. So in that sense, it's not, if you play too safe by not wanting to get inside the IPO game, then you're also losing out, isn't it?
No, I'm not saying you should not be there in the IPO game. You should be there. I think that's the biggest game being played right now. But then at the same time, you just can't apply blindly for all the IPOs. And that's the reason I gave you the example of Fed Bank. Because anyway, one has not lost much, but there's a possibility then that one can lose if the valuations are very high. And if you're talking of IREDA, I think it's what's happening now is more of a madness. A stock which has gone about 4x, nearly 4x within a month. It came out, I think, on 13th or 15th of last month, and already we are at nearly 4x. If you look at valuations, valuations are much more expensive than REC, PFC, which are the closest comparables. Because I suppose there are a couple of buzzwords which the market has taken up very well. The first buzzword is green energy, because they are into green. That's what is selling. Recently, the management came and talked about retail loans. I think that's the other I think the catalyst for the stock to go up. But then if you look at the valuation perspective, book to market price, it's more expensive than possibly a HDFC Bank. And if you look at the P, I think P is what, nearly 2 or 3 times the closest competition, which is REC PFC. So, I mean, I really will not look at buying at this point of time. And those who have bought in the IPO, I think should not be too greedy and at least book at least 50% of, I mean, whatever they've bought. I mean, you're getting your capital back plus 100% returns.
Greed is not good, but that's the message coming in. Be careful while investing in IPOs. The momentum seemed to have picked up towards the second half of the year, especially towards the end of the year. But I think Amrish asking investors to be extremely very careful, especially when the numbers do not really justify the exuberance in the primary market.
At the same time, not holding back investors as well. He's saying, go ahead, go for it.
Be careful.
Just be careful.
All right. Amrish Baliga, always a pleasure listening to you, sir. Thank you very much for taking time out. And with that, it's a wrap on this show. Thank you for watching.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space.